Happy Easter, everybody! What is the good news of Easter, ladies and gentlemen? Yes, it's none other than the good Lord has risen. Okay, so what about the Happy Easter news from the markets? Yes, ladies and gentlemen, this is something I want to share with you because in this week's video, I'm going to share in this year's Easter through our YouTube videos, since we've been doing YouTube videos on a weekly basis since last year. In the prior years, I've actually shared in my various GCP global investment classes, and I think a lot of people actually benefited from that. So in this week's video, I just want to share with you essentially the wonderful message of Easter and what about it this year. You may be scratching, hey, are there actually really good news? Because if we look at the lackadaisical performance of the Singapore stock market, it's like waste of time. If you look at the US market, it's hovering uncertainty. But really, ladies and gentlemen, because we are global investors, we always have something interesting for you to share. Now, look no further, look at Europe. Look at the first stock, or rather the first index, is actually the DAX index. Do you know, ladies and gentlemen, that the DAX index is now finally challenging its historical high of 15,500 in the last 35 years. Yes, 15,500. So the likes of your BMW and Benz, are having a great time. Cement producers like Holcim in Germany is having a great time in terms of the outperformance. Now, look no further, look at the neighbor that is actually in France, there where you have the CAC 40 index. And yes, ladies and gentlemen, it may not, or you may have found amiss that the CAC index is challenging its high of 7,300, a multi-year, 30-year high. Okay, so for us, this is a wonderful time because we have holdings in the likes of LVMH, Kering, as well as Hermes, as well as L'Oreal, all of which are listed in the CAC index. So if you look further, ladies and gentlemen, look at the Euro stock index, which comprises 17 bourses in Europe. The big names in that portfolio includes many of the pharmaceutical companies from Switzerland, the likes of basically Roche, the likes of basically Eli Lilly, and then you also have chocolate companies like Lindt and Sprungli, for which we are also shareholders. Now, in this week's video, essentially, I just want to share with you two companies that we actually shared and pronounced in our GCP global investment classes, why they should be in your portfolio. Okay, the first of which is actually LVMH. Now, ladies and gentlemen, the reason why we actually bought into LVMH last year is not because the chairman Bernard Arnault is the richest man, as of last year. Basically, he was only top 3, but how is it that we are able to spot, before the share price ran from 550 to 837 as we speak? Now, look no further, ladies and gentlemen, because for those of you who know us at GCP Global, we are very, very academically data-driven analysis, and we share this very openly in our classes every quarterly for the last 34 years. Now, for LVMH, it was a very straightforward case. You don't need to be a very smart person. You notice that this shows the detailed analysis of the revenue of LVMH way back in 2015, and they posted revenue of 35.6 billion way back in 2015. It took them how many years? 7 years, to double that revenue to 64 billion we achieved in 2021, rather 6 years. Okay, and come last year, they posted a record revenue of 79.2 billion. Now, in the process, when profit doubled in the last 7 years, what happened to profits? Profits from recurring operations, actually boomed from 6.6 billion to how much? Oh my goodness, ladies and gentlemen, 21 billion last year. That is an increase of 3.5 times. This again emphasizes and reiterates what we have been teaching in our classes. For companies like LVMH, Kering, Rougemont, or essentially Hermes. They are not capital intensive. It means that if the revenue grows, the profit will have a potential explosive impact of at the bottom line. And that's the kind of profits that will drive share prices. And that's why you find this lacking on SGX or any bourses in Asia. Now look at the net profit for LVMH. What happened? It actually boomed or exploded from 3.5 billion way back in 2015 and doubled to 7.17 billion in 2019. That is a course of 1, 2, 3, 4 years. And then, it just took them from 2019 to 2022 to boom from 7 billion to 14 billion. So going back in 7 years to 2015, from 3.5 billion, that profit had exploded from 3.5 billion to 14 billion, ladies and gentlemen, almost a 400% increase. Now, why was it that LVMH was already in our portfolio from the very beginning, as well as for those who attend our global brands classes years ago and have benefited? This is because, very simple, you notice that in our Business Times interview, we have shared the principles for which we have picked stocks, and that includes return on invested capital. The other parameters that we look at is the return on equity that you can see here in the LVMH detailed analysis data. Then we look at EV EBITDA, we look at operating ratios. LVMH, the operating ratios, return on equity capital, it's at 15%, it's consistent for the last 7 years, and yet after that it can still increase up to 18% this year, or rather last year. And this year we're looking for even a greater increase in the ROIC, right? And in the process, the operating margin, of the company has increased, from less than 15% years ago now to 30% as of the latest results. And the net operating profit margin has actually increased to about 20%. So, ladies and gentlemen, what are the things and how to prepare for an explosive kind of companies and to see that their earnings can explode? Well, this is an exercise that I like to share, which I do. And when the share price went out to 550, we actually bought into it, and that's what we shared in our classes as well as our Easter message last year. The share price has boomed henceforth from 550 to 846 as we speak of last night. Now, the second company that we love to share in this wonderful Easter message is Hermes. Hermes is a company that we've held almost close to a decade now, ladies and gentlemen. And one of the key precepts that we bought into Hermes and what we share on a yearly basis, why the stock remain in our portfolio, is that take a look. The revenue achieved in 2015 was 4.8 billion. As of last year, how much did we make? Oh my goodness, it's 11.6 billion. Yes, doubling. But once again, like Kering, like Rougemont, like LVMH, we emphasize that because they are not capital intensive kind of companies, when the revenues increase, the profits will explode. So, ladies and gentlemen, like what we showed you in our earlier video, if you want to be fit, really fit, and be flexible and quick, do clapping push-up, because that keeps you in tip-top physical conditions. And what happens to Hermes? Exactly, the recurring operating income increased from 1.5 billion only in 2015 to 5 billion as of last year. Can you just imagine? If you see the breakdown of Hermes, you will see that 50% of its profits come from leather and saddlery goods. Yes, as you know, ladies and gentlemen, for those of you who have girlfriends, mothers, daughters, you notice that some of the Birkin bags and the Kelly bags, that Hermes actually carry has the great